Hey everyone, me Kevin here. Tomorrow is Quadruple Witching Day, and by now there's a good chance you've either heard somebody talk about this and gone, oh, Quadruple Witching Day, or you've seen a TikTok on it, or you've seen something talking about Quadruple Witching Day, and how, oh my gosh, all these things expire and happen tomorrow in the stock market, and volatility's gonna be up. Folks, let's explain what this is. Is this something to actually care about? So basically, Quadruple Witching Day is something that happens 4 times a year, and it's when you get this alignment of dates on the calendar. It's when market index futures, options futures, stock options, and stock futures all expire on the same day. And all this leads to is more buying and selling of stuff on the markets on a particular day. Now, what does it do for actual price? Well, before I say anything, why don't we just go back to all 4 Quadruple Witching days that happened in 2020. 2020 was obviously a pretty volatile and fearful year, and I've marked 4 of them on this chart. Might not be able to see them right now, so we'll zoom in, because one's right here, which that doesn't look good. But the other one is right here, and the other one is right here, and the other one is right here. So with the exception of the one that kind of ended out right here, you don't really notice anything particular about these dates. All right, let's zoom into the first day of Quadruple Witching in 2020. So the first Quadruple Witching Day was right here on March 20th, which is a big red candle. We've got negative 4.04%, so definitely a down day. Now, this was right next to the bottom of the market last year. The bottom of the market actually happened intraday on the 23rd when the NASDAQ had hit a low of 6,771, which the day before we closed at 6,994, which is about 223 points more. The 23rd was the bottom of the market, but the deepest candlestick we really got was this Quadruple Witching Day here in 2020, which was a day where stocks did end up closing down 4.04% in the NASDAQ, which when you go down 4% on the NASDAQ, you know stuff like Tesla's down like 10% that day. Like it's stuff's bleeding, right? Tesla has such a higher beta, which means it moves at more of an amplification than the rest of the market. In both directions, down and up. But anyway, on average, right? So anyway, this was the first day. Not a really good representation, right? That's a pretty big red day, but we were in the midst of a crisis. So now we go on over to June 19th. So June 19th is right here. Oh, and by the way, it's worth noting that yes, these bottom candlesticks right here, those represent volume, and you'll actually see they peaked on March 20th. That means you had the most shares traded that day, 493 million. The day before was 374, and the day after was 361. So about a third more shares traded. If we go over to the next date, we have June 19th. June 19th is right here. You could definitely see this volume bar is substantially higher than the ones to the left and right. Left and right are about 187 and 184 million. Here we've got 500 million in volume. But take a look at the candlestick. It's actually very compressed. In other words, the highs and lows within the day were very close together, whereas days prior, you had significantly larger candlesticks. So in this case, Quadruple Witching Day led to a price decline of 0.03%. Basically, it ended flat on this particular Quadruple Witching Day. And before, we only had a third more volume. Right now, in this case, we had about 2.5 times more volume. So you can see, like, with these two examples, more volume doesn't necessarily tell you what's going to happen with price, at least not with these 2 days. Let's go to the next one. So the next Quadruple Witching Day was September 18th, which was after the crash that really started over here around September 4th after Tesla split. But anyway, so we are going to September 18th right here. You can again point it out with the big candlestick here at the bottom, very large here. This is 537 million versus 271 the day before and 276 the day after. That puts us right around, I would say, 2 times. So let's write down 2x in volume from the day before and after. And we were down about 1.3% here. So we got the 18th minus 1.3%. Okay, so far we're 3 out of 3 all red here, right? Let's now go to the last Quadruple Witching Day, and I wonder if you could spot it out. Look for that big old volume spike. We over tripled our volume on December 18th. We went from 178 to 682 to 216. So almost triple, 3x the volume, and the stocks or the NASDAQ that day moved 0.11%. So it's kind of weird. The biggest drop we had was right in the middle of a crash on a quadruple witching day, where the NASDAQ went down 4.04%, and we had just a third more volume. But when we had 2.5x volume, we only moved negative 0.03%, aka flat. When we had 2x the volume on September 18th, we moved negative 1.3%. And when we had 3x the volume on December 18th, we moved 0.11% down. Like, nothing, right? There doesn't seem to be a correlation, in other words, between volume and pricing. And that's really important because we have another quadruple witching day coming up tomorrow. And I'm gonna go ahead and average these candles here. There we go. And my expectation is it just wouldn't be surprising for us to see a double dip on the NASDAQ, and some of the stocks are really feeling some pain. But we talked about that in a prior video, so we're not gonna go super deep on that right now. We'll just quickly draw a little line here and say, hey, look, let's say at some point here, our bottom was around here, 12,299 within a day. Let's say we end up dipping somewhere around 12, I don't know, 5, okay? Let's draw that here. 12.5. That's roughly 10%. That's roughly 10% above the previous bottom we had at the NASDAQ, which is, let's just draw another horizontal line right here. Whoopsies. Oh, I didn't grab it. There we go. Let's draw another horizontal. So over here, I wouldn't be surprised if we end up dipping to something like this if we keep seeing pain in the market. But now, is quadruple witching day going to be the day that actually creates that kind of pain? Well, based on solely, like, if the only thing we were told is, hey, it's quadruple witching day, in my opinion, the answer is no. We're not necessarily going to see a big plummet solely because it's quadruple witching day tomorrow. By looking back at the past 4 quadruple witching days, even though I think there's a chance we could end up dipping lower to within 10% of our prior low, I don't think, and it could be, but I don't think quadruple witching day is going to be the reason for that happening. In other words, if the market does dip substantially tomorrow, it's not because of quadruple witching day. If the market doesn't dip substantially tomorrow, it's no surprise because it's not going to be quadruple witching day. It's going to be related to rapid acceleration in bond yields at this point that pushes the market down lower again, or bond yields plummet and we get a reversal, right? Quadruple witching day solely because volume goes up does not mean price has to change. And why is that? Like, logically, why is that? Well, obviously, it's because you're all course members. You've all used the 38% off coupon code link down below, and you've joined me. You've taken advantage of this coupon before all the pricing changes after the stimmy comes in tomorrow. But why really? Why really do we not see prices go down when there's more volume? Because think about it. Just because there are more people buying and selling does not mean the market value of something has to change. If you have 10 buyers buying bread and 10 sellers selling bread, you have equilibrium and there's some kind of market price that gets established. That you don't have to have equal sellers and equal buyers, obviously, to have equilibrium, but you get some kind of equilibrium in price. Now, if we double the buyers and we double the sellers, the price should be agnostic to that, unless there are only 10 loaves of bread between those 20 sellers, right? As long as each vendor comes with one piece of bread and there's a buyer that shows up, the amount of people trading, the volume, should have absolutely no impact on the price, in my opinion. What instead drives price? Sentiment. Sentiment is, what are people thinking? What are people feeling? What is the emotion of the day? What are momentum and high frequency traders trying to take advantage of? What algorithmic signals are they trading off? Every time bond yields move like 0.1%, you know these machines are going, yeah, sell, oh, they're going the other way. It's so stupid. Like, this is not, in my opinion, a retail-driven pain that we're seeing in the market here. In my opinion, this is high-frequency data traders, or high-frequency traders, not data traders, high-frequency traders, although they use data. It's hedge funds maybe de-risking because they're trying to, well, let's just get out of tech a little bit. But hedge funds notoriously underperform the market. Why? Because they sell when everybody else is selling. It's stupid. And then they try to time back in. They think they can time the market. Folks, there's a reason the hedgies always underperform the market. Like, I'd rather be in an actively traded ETF, for example, and I don't want to sound too bullish on ARK, but I'd rather be in an ARK or in an actively traded ETF than in some hedge fund that is going to do the opposite of what we should be doing. And what we should be doing is buying dips. Now, obviously, once you start getting low in cash, then wait, wait a little bit. Hey, we could still fall some more. Go work more. That's what I always say. Now, I know that sounds crazy and simplistic, but I'm serious. Like, it's during the times of market dips that I always get motivated. I'm like, well, all right, I guess I got to put in some more work. I'm going to do another, like in real estate. When I was a real estate agent full-time, which obviously I'm not a real estate agent full-time right now, but I am a real estate agent still, real estate broker. When things were painful, guess what I would do? I'd get off my butt and I'd go, all right, I guess I'm doing a Tuesday open house because I need to find someone. And I found people on Tuesday open houses just because, like, who else was working that day, It's amazing when you get out there and try to grind and put some effort into it. We will find a way to make some additional cash. And for me, I'd just be plowing all that crap into the stock market. So anyway, these are just my thoughts regarding this whole quadruple witching guy. It's not that big of a deal. Thank you so much for watching, folks. Check out that coupon code, and we will see you later.